I mean, we have renewed U.S.-China trade tensions. How are you factoring all of that into your calculations when it comes to projections for growth, especially for China?
Good to be with you, Haslinda. So the increase in export controls, the most recent tensions, be it on rare earth elements by China and chips and technology in the U.S., and recent talk of potential additional tariffs, U.S. tariffs in China, illustrate the kind of risks to the economic outlook posed by trade policy uncertainty. As you know, Haslinda, we have forecast growth in Asia Pacific to be 4.5% for this year, and coming down to 4.1% next year. But we also note that our baseline forecasts are subject to significant downside risks. And the kind of tensions we have been seeing recently are the kind of risks which we talked about in our report, which we say, and in our report, we actually do a downside scenario, which analyzing the potential impact of tariff increases and disruption in supply chains. Of course, the most recent announcement, the most recent cause of trade tensions are not the ones which we had modeled in our report, but what we show is that those are the kind of risks which could materialize. And in our report, in the World Economic Outlook, we show that for next year, in the baseline, we have growth at 3.1% for the global economy. But if these risks materialize, greater tariffs and disruption supply chain, then growth could be lower by 0.3 percentage points. Of course, the kind of tensions we see more recently are different to what we had in our report, but it speaks to the kind of risks that we see for the economy, for the world economy, including for China. Now, for China, we have 4.8% this year and 4.2% next year, and
right.
If there are further tensions, that could also mean downside risks for China.
This is a China that's also flooding the world with cheap goods on the back of the tariffs being imposed by the U.S. How do you see this playing out? What is the cost to the world that China is doing this? How is that factoring into your calculations?
So there are two aspects to this, Haslinda. One is we should look at what's been happening to global supply chains for some time. Now, what we show is that global supply chains are being reconfigured since 2018-19 or 2017-18, when the first tensions between the U.S. and China rose. So that reconfiguration is happening. And what we see is that China's exports to the U.S. have been declining quite sharply since then, but China's exports to the rest of Asia, including notably to ASEAN, have been rising. At the same time, ASEAN's exports to China are rising. So there is this reconfiguration of supply chains, and this doesn't mean there's a rerouting of trade. It actually means there is actually reconfiguration because every country is adding value. Now, the question you're asking is whether there's excess capacity and that whole issue of how is that impacting the rest of the region. What we find is that in China, one of the big issues we have is deflationary pressures. Now, that's leading to lower export prices, which means that China is actually exporting a lot to countries around it, including the ASEAN, which are facing threat from Chinese goods. Now, there are two sides to this problem. One, of course, is a macroeconomic side, which is domestic demand in China is very, very weak. So when China addresses the domestic demand, including by boosting consumption, fixing the real estate sector, and so on, domestic demand should go up, and that will allow prices to go up. It'll help China reflate its economy, and that should automatically mean that less of a spillovers to the rest of the region. At the sectoral level, so that's at the macroeconomic level. At the sectoral level, what we see is China is providing a wide range of support for priority sectors, including EVs and so on. And that's led to policies like anti-involution and so on and so forth. And we've estimated the kind of support China is providing, the industrial policy support, is about 4% every year. So what we are calling for is for China to scale back those policies and remove trade and investment restrictions, which would both raise productivity and growth and also reduce internal and external imbalances around it. So internal balances within China and external balances
Krishna,
because of what's happening.